Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London sugar markets. I'll start with ICE raw sugar. The formation of the double top over August to September has been the most significant feature in recent days. The rise up to the, well, let's be honest, somewhat suspect resistance of the upper time, currently at 1996 of December 2020 to April 2021 bullish shift pitchfork, which was nevertheless ably backed up by the overhead congestion of the January to February 2017 move between 2010 and 21 even. Well, between the two of them, they managed to cap the market and cause the double top. Last week we started heading down the far side of this bearish pattern, notably closing below the neckline of the double top last Thursday and below the next support underneath, that's the high from February this year, at 1894 on Friday. Today we've tried even lower, testing the rising short-medium moving average currently at 1862, and in the process fulfilling all the targets on the downside for the double top. So, all pretty bearish looking, you'd think. Well, not necessarily so. We have a knot congestion K, that's with a K, of business between roughly 1875 and 1780, made up over the July to August month end stroke start. Within this knot, we have the 21st century absolute Fibonacci line at 1809, the rising medium moving average currently 1798, and soon the rising middle time currently at 1771 of that very same bearish shift pitchfork. The ammunition accumulated over August overhead does not appear to be enough to break these, at least not just yet. This may go some way to explain why today's dip has been tentative to say the least. Overall, the only pattern that I can see going forward is the August-based bearish Andrews pitchfork, notably testing the testing of the lower time currently at 1864. Now this pitchfork is at best a speculative drawing on my part, but as I don't see a whole lot else at this time, then it will have to do. ICE Europe white sugar. First off, I know it may have been a little while ago, but I acknowledge the market reaching target X in the 495 area, the target for the June to July small double bottom, after so many missed opportunities. I also acknowledge reaching target X1, the December 2020 to date action bull flag target in the 510 area. Finally, I'll leave it on for the moment, but off the top of the daily chart, we have the whole September 2020 to date action as a huge bull flag with potential topside target X2 in the 560 area. All these were originally big asks of the market, but then 2 out of 3 targets have indeed been reached. Anyway, the market this time petered out in the 510 area, and we've seen the action since early August form a possible bear flag formation. This despite the golden cross of the short medium moving average currently at, it's a lagging indicator anyway, it's currently at 462, and that's up over the medium moving average currently 457.60. This short medium moving average has indeed proved to be at least a halt, if not a turnaround for the market, as it has been ably supported by the recent July to August 50% Fibonacci line at 461.40, as you can see last Friday and again today. Now, the target for the recent bear flag is not that far away, only down in the area of the 456.70 high from February 2020. However, right now, it looks just a little too much for this market. Now, there is one more pattern, a new and tentative one, that might possibly be valid. It is to look at the action since the August high as a possible descending wedge pattern, currently 462.20 to 483.80. This is a very speculative drawing on my part. I haven't even labelled it yet, as it is, to my mind, still too early. But it is worth watching as we go forward into this week. So far, we've had 2 touches either side. We need a minimum of 3 touches on at least one of the sides before a breakout. And indeed, today's action has been moving up to touch the top side. but we've not quite managed it yet, and we're nowhere near a breakout or looking at targets on the top side for it. But it is worth maintaining a close watch. Sugar white premium spread. As I said many weeks ago, the key support here was, and still is, the middle time, currently at 37 even, of the big bearish May 2020 to February 2021 Andrews pitchfork. This pitchfork has been showing the bearish angle of attack of this market since February. As I said 2+ months ago, and I quote, "Please note this is a declining support, as is appropriate for a bearish pitchfork. So please do not think of it as any form of counter to the overall bearish incentive that is currently evident here. It is, as I pointed out 2 weeks ago, which is actually now 13 weeks ago. It is, as I pointed out 2 weeks ago, until we see the market move out of these strictures, then this bearish pitchfork will prevail." End of quote. So far, all we've managed to do, including this week, is move up a little, in between the middle tine and the overhead upper tine. And the upper tine is currently at 71.70. But just in case, looking beyond the upper tine, the first significant overhead resistance of note that I have mentioned consistently is the neckline of the February to November 2020 failed head and shoulders top, currently at 75 even. This neckline now has a partner, the 50% Fibonacci line of the 2021 action so far at 73 3/4, plus the long moving average, currently at 77 1/4, is now actually entering the frame. Meanwhile, the medium moving average, currently 67 even, is now streaking below those levels and may become a partner to the upper tine if the tempering action of this market continues. However, please remember something I've said again and again, especially in any rally. It is, after all, a bearish pitchfork, and until it is broken or replaced, it will drive the bearish incentive. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.